Well, certainly, there'll still be tension around the statements, even though the markets are fully priced for 50 basis points. So this is not the meeting for a surprise. We've had a couple in recent months, but that seems very much the straightforward one for markets. So the focus is really on the statement, certain phrases such as policy not being on a preset path, or do they want to do what Jay Powell did, which was to focus on any notion of interest rates being cut later next year, that sort of thing. So they want to put in some messages there. Does Governor Lowe want to strengthen it, sound more hard on inflation, and more willing to tolerate a slowdown in the economy in order to achieve it? That's really where the key will be. So I think most people, when we get the release, will scroll down to the bottom of the page and read that concluding paragraph and just see whether there's something that really catches the eye.
But in terms of what we can expect coming next from the RBA, and especially as it relates to the Australian dollar, are they stuck in a policy rut almost because of what the Fed is doing, because of what you're seeing elsewhere? But you offset that somewhat by the fact that we are seeing house prices to come off incredibly fast, and then it could be that consumption does take a hit via the wealth effect. Are we going to be in a situation where the RBA is going to have to maintain any kind of aggression, or do you think that they can perhaps hold it, what some are suggesting, that 2.6, 2.8?
Yeah, well, certainly there are differences with the US in terms of where inflation is expected to reach, and earlier you were talking about the UK. That's sort of another whole level. So the countries are not identical in terms of the inflation outlook, and in Australia's case, obviously we've got some support from a very strong trade position with high energy prices are actually positive for the trade position. So it is a bit of a mixed picture. For the Aussie dollar, once the RBA moved into it, finally admitted that its incredibly low, record low interest rates were no longer appropriate, it wasn't until about April. Once they did that, the yield spreads in Australia have actually been reasonably stable against the US dollar. So yes, the RBA does seem to be sort of playing catch up with the Fed and following it, and it does mention other major central bank moves when it in its statement that is a factor for it. So in that regard, for the Aussie, that's been, we'd say, roughly neutral for the past couple of months, and today's decision probably won't change that. So it does get back to that story of whether the US dollar resumes its the very strong momentum we've seen recently.